A bearish symmetrical triangle is a common technical chart pattern that suggests a potential downtrend in the price of an asset. It typically forms after a significant price move and indicates a period of consolidation before a potential breakdown. Here are the key characteristics of a bearish symmetrical triangle. Formation. The pattern consists of two converging trend lines, one representing the highs, resistance, and the other representing the lows, support. These trend lines meet at a point, forming a triangular shape. The upper trend line slopes downward, and the lower trend line slopes upward. Formation. The pattern consists of two converging trend lines, one representing the highs, resistance, and the other representing the lows, support. These trend lines meet at a point, forming a triangular shape. The upper trend line slopes downward, and the lower trend line slopes upward. Duration. Bearish symmetrical triangles often develop over several weeks to a few months, although the time frame can vary. Volume. During the formation of the pattern, trading volume tends to decrease, which signals reduced interest or indecision in the market. Breakout. The pattern is typically followed by a breakout to the downside, where the price moves out of the triangle formation in a downward direction. This breakout is a signal that the bearish trend may continue. Target. Traders often use the height of the triangle as a potential price target. To calculate the target, measure the vertical distance from the highest point of the triangle to the lowest point and then subtract that distance from the breakout point. Confirmation. It's important to wait for a clear breakout below the lower trend line with increased volume to confirm the bearish signal. False breakouts. As with bullish symmetrical triangles, false breakouts can occur. These are instances where the price briefly moves below the lower trend line but then reverses back into the triangle. To reduce the risk of false breakouts, traders may wait for a strong, sustained move with increased volume. Like all technical patterns, bearish symmetrical triangles are not foolproof indicators, and they should be used in conjunction with other technical and fundamental analysis tools to make more informed trading decisions. Risk management, including setting appropriate stop-loss orders, is essential when trading based on chart patterns. Thanks for watching. If you want to learn more about Forex trading, and improve your trading strategy, subscribe, like, and wait for next video.